Good day to you. My name is Paul Edwards, the owner of Possibility Plus Financial Services. I work with, or my company, we work with individuals, and we would love to work with you. We provide life insurance, annuities, long-term care. We help you to protect yourself and your family and your business. And today I want to talk to you about term life insurance, what it is. So term life insurance, I want to talk to you about what it is, the different types, the pros and the cons of term life insurance. So term life insurance provides a death benefit that pays the beneficiaries of the policyholder throughout a specified period of time. So in other words, with term life insurance, you have annual renewable, where every year you renew the term. And each year on the term anniversary, the policy increase, the cost of the term insurance increase. You have 5 years term, 10 years, 15 years, 20 years. Some company offer 30 years. Plus you have 13, 14, 15. So you can select the period of time. So for example, someone takes out a mortgage. We call this mortgage insurance. You purchase your new home, your lovely home, whatever the mortgage is, 300,000, 400,000, 100,000, whatever the mortgage is. You take out the light and they give you a 30 years mortgage or they give you a 20 years mortgage. So you take out the term policy to cover that period of time so that if anything was to happen to you, the payer of the mortgage, the death benefit would go to your beneficiary, where they would use that death benefit to pay off the house so they don't have the burden of the mortgage. So let us say you purchase a house and it's 300,000 and you take out a 300,000 term, a 30 years term. God forbid you passed in 15 years. You would have already paid up 15 years of the mortgage. So let us say you paid up 100,000. So the outstanding amount arrears left on that mortgage is 200,000. They would still give your husband or wife, your beneficiary, that 300,000. So they would use 200,000 to pay off the mortgage, and they would still have 100,000 left to assist in the family. So every person who takes out a mortgage, it's very important to have a mortgage insurance, because what you don't want is to be a burden on your beneficiaries if the unexpected was to happen to you. And with term insurance, it's very, very affordable. And so call me today. You can call me at 321-557-1155 so I can give you a quote on your mortgage insurance. So it's a term policies. Now, once the term policy expires, the policyholder can either renew it for another term, possibly convert the policy to a permanent coverage, or allow the term life insurance policy to lapse. Here are some very important points about term. Term life insurance guarantees payment of a stated death benefit to the insured beneficiaries if the insured person dies during that specified term. These policies have no value other than the guaranteed death benefit and don't feature a saving component as found in permanent life insurance products. Term life premiums are based on a person's age, health, and life expectancy. Depending on the insurance company, it may be possible to turn term life into a whole life insurance. You can purchase term life products that last 1 year, 5 years, 10 years, 15 years, 20 years, or more. And you can usually renew them for an additional term. How term life insurance works. When you buy a term life insurance policy, the insurance company determines the premium based on the policy's value, that's the payout amount, and such factors as your age, gender, and health. Other considerations affecting rates include the company business expense, how much it earns from its investment, and mortality rate for each age. In some cases, a medical exam might be required. The insurance companies may also inquire about your driving record, your current medication, your smoking status, your occupation, your hobbies, family history, and similar information. If you die during the policy term, the insurer will pay the policy face value to your beneficiaries. This cash benefit, which is not typically taxable, may be used by beneficiaries to settle your health care and funeral costs, consumer debts, mortgage debts, and other expenses. However, beneficiaries are not required to use the insurance proceeds to settle the deceased debts. If the policy expires before your death, or you live beyond the policy term, there is no payout. You may be able to renew a term policy at expiration, but the premiums will be recalculated based on your age at the time of renewal. So in other words, with a term policy, let us say you have a 20 years term. And with some companies, they give you 10 years to convert some or all of it into a permanent policy. So you can convert it into a permanent policy. Some companies give you a longer period to convert without any medical or further medical questions. But you live more than 20 years, that term policy is going to expire. Some companies, they allow you to renew the term, but they are going to recalculate the cost based on your present birthday. So you might have took out that policy when you were 30. You might be paying $10 or $20, right? $30 a month for that term, depending on the amount, right? So an average of 500,000 term policy for a 30-year-old, the average cost for a male is about $30 per month. For a female, is about $25. For a 40-year-old, the average cost is about $52 for a 500,000 coverage, right? And for a female, it's about $42. And so you have that term policy and it's going to expire. Then they are going, if you want to keep it, they are going to recalculate the payment based on your current birthday. So it could be significantly higher. But term policies are very, very good, right? Because it protects you for that period of time. And so I always say to persons, make sure you have a policy. Make sure you have a policy to protect yourself, protect your loved ones, to protect your business, right? Because anything can happen. None of us plan to die, but it happens. I'm sure you know someone, all of us listening to me, you have known of persons who were younger than you who have died. And a lot of us have seen the effect it has on the family. Because remember that many times when a loved one dies, they are the breadwinner, or one of the breadwinner. So a family's income is severely affected. So you need that coverage to protect your loved ones. We said in sickness and in health. So having a life insurance policy is vital. And The data I read a couple of weeks ago says over 50% of Americans don't have life insurance or do not have enough life insurance. So you can call me today at 321, yes, 321 557 1155. So I can do a quote for you and we can discuss your life insurance needs. So it's very important. Example of term life insurance, right? You can do a 10 years. You can do a 20 years, a 30 years, right? There are several types of term life insurance. The best option will depend on your individual circumstances. That's why you have to talk with me. So we identify your individual circumstances, and that way we can recommend the best type of term insurance that you need. Remember, there are other types, but today I'm just talking about term insurance. Level premium insurance has a fixed monthly premium for the life of the policy. So with a level premium, it is fixed. So if you have a 30 years, it is fixed for 30 years. It doesn't change, doesn't increase. If you have a 10 years, it is fixed for 10 years, right? You have what they call a yearly renewable term. So yearly renewable terms are a one-year policy. So these are one-year policies that you renew the term every year, right? So every year the premium is going to increase, right? Again, you do a term based on your needs. You have what we call in decreasing term policy, where these policies have death benefit that decrease each year according to a predetermined schedule. The policyholder pays a fixed level premium for the duration of the policy. So let us say, for example, with a decreasing term policy, you took out $1 million in term policy. It could have been structured in such a way that the premium, that the death benefit decreases by 100,000 every year. So there's way to structure these policies. But for us to know what type of policy is best for you. For example, if you're only going to need a policy for 5 or 8 years, a yearly renewable policy might be the most cost effective. Because for the first 8 years, a yearly renewable policy is the most cost effective, right? So when you talk with me, we will determine what policy is the best one for you. Term life insurance is attractive to young people with children. Parents can obtain substantial coverage for a low cost. And if the insured dies while the policy is in effect, the family can rely on the death benefit to replace lost income. So term insurance policy is very attractive to young people. You're 20, 30, you have a wife, you have a child, make sure both of you have term policies. And some of these policies cost $10, $15, $20 per month for a lot of coverage, right? You don't expect to lose a loved one, but anything can happen. So it gives you peace of mind, right? And so it's very, very important that we have a policy in place. So that in essence is what a term policy is, right? Convertible term life insurance, a term policy that includes a conversion rider. The rider guarantees the right to convert an enforced term policy or one about to expire to a permanent plan. So there are some term policies which are convertible, and many persons convert some or all of their policy into a permanent policy. The key thing is that you speak with a professional like me. You have some term policies that you get your money back at the end of a term. if you're alive when the term policy expires, right? If you pay for that rider, then you can get your money back. But those are a bit more expensive when you have to calculate that there's a cost for that rider. So again, we do it based on your budget, based on your goals, based on your objectives. Now, term life insurance is a good option for people who can't or won't pay the much higher monthly premium associated with whole life insurance. Term life is somewhat similar to car insurance. It is statistically unlikely that you will need it, and the premiums are drawn, the premiums are paid each month. But if the worst happens, your family will receive this benefit. I've always said, we pay car insurance. We don't plan to go there and crash our cars. But in case it happens, the car insurance will help us to repurchase a new car, pay for injury. We pay house insurance. We don't plan to burn down our house. But in case something happens, you see here in Florida how the cost of home insurance is skyrocketing because nobody wants to cover homes in Florida due to the hurricane, right? Skyrocketing, but we buy it because just in case. The mortgage company won't lend you the mortgage unless you have the insurance to protect the home. So too, you must protect yourself, your family, and your business with a life insurance policy. So I want you to take up your phone right now and call me. My name is Paul Edwards. I am one of the owner. My wife and I own this company, Possibility Plus Financial Services. We specialize in life insurance. We do term, universal life, whole life, burial policies, mortgage policies. We do annuities, healthcare, Medicare, long-term care. Call me today. Call me now. 321-557-1155. And I will, God willing, life spare, and I'll see you next week again with Possibility Plus Financial Services.